Hello everybody. In my previous video, I made an undertaking that I would come back with a video to talk about valuation of real estate, specifically residential properties. I will be talking about the valuation of houses in this edition of the video. At the end of the presentation, I will share with you a quick valuation methodology which will help you to quickly ascertain if a property is fairly valued, overvalued, or undervalued. So the question that we need to answer is, how much is my house really worth? First of all, I need to indicate that there are basically two values that I am interested in at this point. There is what is called the market value, and there is also what I may call the fair value of the property. The market value is what exactly the market is prepared to pay for your property, what buyers are prepared to pay and is accepted to be accepted by sellers of a similar property. Basically, I'm talking about a house which is similar in terms of size and locality. However, it is important to note that no two properties are exactly the same. Properties, just like identical twins, they are not exactly the same. What is the fair value? The fair value refers to the aggregate net present value of all the anticipated future cash flows from a property. So, looking at a residential property, if you own it, there are basically two fundamental cash flows that you enjoy from being the owner of that property. You enjoy rental income, number one. Secondly, you also receive a lump sum payment upon disposal if you are to dispose of that house. Before I go further, in terms of properties, there are basically two land tenure systems that we need to understand in order for us to be able to determine accurately how much a particular property is worth. The first type of land tenure system is the freehold. Under the freehold system, when you purchase a property, you purchase the land where that property is erected upon. Unlike the second one, which is the leasehold, under the leasehold, when you purchase a property, you will still be liable to payment of rentals to the original owner of the land. And leases do not have infinite lives. Usually leases are between 99 and 100 years, or 120 in some instances. So if you are investing with future generations in mind, I would kindly advise to lean towards the freehold. Consider the freehold first, and in the event that you cannot find something that is suitable for you, then you can consider the leasehold, but with a critical understanding of the differences that I have mentioned here. What actually affects the value of properties? What determines the value of a property? The value of a property is affected by its location, the geographical location. For example, here in the UK, you will find out that as you move from the southern part of the country northwards, the value of properties generally tends to go down. And this, I think, is an indication of the demand and supply, because most of the economic activity in the UK takes place around London. The further you move away from London, the lesser the value of properties. In a country like Zimbabwe, you also find out that properties in Borodale obviously have higher values than properties in Meborane, Marlborough, Warren Park, and Chitungwiza. Number two, the property size. The property size also affects the value of the property. I would say there's a direct relationship between the size of the property in terms of the actual structure and the land on which the property is sitting on. The bigger the land size, the bigger the value, the bigger the structure erected thereupon, like the number of bedrooms. It's one attribute which is usually referred to when you want to try to identify the correct value of the property. We may also want to talk about the age of the property. you know, properties, assuming that we are talking of the same locality, new properties will usually have slightly higher values than the old ones. There is another aspect which is usually considered by those people who are selling their properties as a source of value. They always talk of the sentimental value, and they always want to put a premium to the price tag when they are in selling their properties. However, this is a value which buyers sometimes do not exactly appreciate, and therefore are not prepared to compensate the seller for that kind of value. For example, someone will be saying, this is my first house, I worked so much to have this house, I received this house as an inheritance from my father. Yes, it's important to you, but from the perspective of the potential buyer, is that really a source of value? I am afraid it might not necessarily be. Why do you want to know the fair value of the property? For you to be able to take advantage of price movements, opportunities to buy or to sell, you need to be meticulous in terms of quickly coming up with the fair value of whatever asset that is on the market, because it does not help you to know that this property has been undervalued when somebody else has actually seized on the opportunity to purchase it. So you need to move in fast. It's like the timing value of that determination that this property is cheap. It's also important to understand that when you approach financiers like the banks, the lenders, those who provide mortgage facilities, they are not keen to invest in properties which are overvalued. I would also suggest you don't go for properties which are fairly valued. You need to leave a leeway that this property price can actually go down and I will still remain with a positive equity. Positive equity, what am I talking about? I'm talking about a scenario where you use somebody's money to buy your property. You approach a bank and they lend you money. When they lend you money, obviously, your balance sheet will be having your house as the asset, and the value will be the market value of that house. And in the case of the bank, they would possibly be considering the first sale value of that house. But on your liability side, you'll be having the loan. So what happens is, while the asset price will be volatile, responding to conditions on the market, prices going up or possibly going down depending on various factors which would be affecting prices, like inflation, like demand and supply. Your loan will not go down until you amortize it. Your loan will not only go down when you make a repayment. So in the event that the price of houses go down when you have borrowed 300,000 and that price goes down to 250,000, you have what we call negative equity. What you are worth will have gone down by 50,000 because you still own the bank an additional 50,000, while you have lost 50,000. So we have to be very concerned about the valuation. I have a valuation model that I have come up with. I have run this model, I've run some simulations. I think I've managed to utilize this model, and about 90% of the times it has always given me a very good clue, a very good indication of whether or not a property is overvalued, fairly valued, or undervalued. What I do is, this model is a hybrid model. It's like a hybrid cash flow model, whereby I look at all the foreseeable future cash inflows from the property. I also take off or I subtract the cash outflows that I will incur as part of maintaining that property. So in the case of a freehold property, obviously you'll be paying rates. I'm assuming even if you have a tenant, you'll be having what we call an operating lease. So as an operating lease, the landlord will be liable to maintain the property. When it comes to the second type of property, the leasehold properties, there are basically two critical charges that you incur monthly. There's what they call the ground charges, and there's also what they call the rate charges. So after you have received your rentals, what you receive is the gross amount. What do you do with the gross amount? Obviously, you cannot take everything. You have to maintain that property. So you have to incur those costs that I am just talking about. I will give an example. If, for example, a property is generating a rental income in gross terms of $450 or pound, whatever, or the RTGS dollar, how do you value that property? My quick model is, I would say 450. How much do I incur every month to maintain this property? I would assume, for example, I am incurring 150. So I would say 450 pounds every month less 150 pounds every month. So the net rental that I pocket from my property is 300 pounds per month. What do I do with the 300 pounds per month? I apply a factor of 300 to that amount. I multiply 300 by 300 and I will get a value of 90,000. I would ignore at this point the lump sum that I would possibly get from disposal. I want to assume it will be time, and to try and avoid confusion from people who are not necessarily coming from a finance background, but who are also keen to benefit from this model. I would flatly multiply 300 by 300 and I would have my fair value indication is 90,000 pounds. How do I use this value? If I am trying to sell my house, I look around, check previous transaction, how many houses have been sold in this locality, how much were they sold for, how do they compare to my house in terms of the quality, in terms of the location, the size, and all those other factors, the finishings. And then, if I'm expecting to get 90,000, how do I indicate it on the market? Should I say I'm selling this house for 90,000? No. I would possibly indicate 110,000. Why should I do so? So that I give leeway and room for negotiations. If I'm buying a property, on the other hand, I can still utilize this model to determine if whatever I'm being asked to pay is the fair amount. How do I utilize this model? I price the house, and after pricing the house, I compare what I deem to be the fair price to whatever is being quoted on the market by sellers. And if there's a variance of about 10%, I would accept, depending on the pressure that you have to buy. If there is a reasonable variance, I would say within the region of plus or minus 10%, I would transact. Kindly like my channel. Kindly share this video if you think it's valuable. If you have colleagues who you think might actually benefit from this video and have not yet subscribed to my channel, please tag them. Thank you so much. If you have any other topics that are of interest to you and which you think I should talk about, please don't hesitate to inbox me. If you have any comments regarding my presentation, please also don't hesitate to talk to me. We will grow together. Together we will grow. Making money makes sense. Preserving value makes sense. Thank you so much. Till we meet again next time. Bye.